Good morning. It's E from MarketWizards.com and eMiniWizard.com. It's about 18 minutes after 9 on the 9th of July, 2019. Reminding traders to use risk capital you can afford to lose. Consistent analysis is the key. Applying our system to whatever you trade. Doesn't matter what vehicle you are using. The system will work, whether it's stocks, ETFs, futures. And a reminder, use risk capital you can afford to lose. All right, let's take a look. Let's start with, well, why don't we take a couple of charts that we've looked at already. Here's one that we posted in the room. We had talked about using this 85, 84, 75 area yesterday as resistance. So that's still our resistance level. And overnight I had posted that look for 62.5 to be supportive. So this chart was posted early, and I'm suggesting that obviously the 71s to 72s are the next resistance level, that the longs need to climb out of Dodge, need to bust that. So for now, that's the range that we are trading based on this chart, which is a 2-day chart. And this was posted in the room. There's a 15-minute chart. And this chart, what I am looking at is how we have turned over and rolled over bow tie style. And now we've got the rain line above us, got the green, red, blue. So we're in an umbrella trade based on the 15-minute chart. And obviously we're going to use this 78, 77 area as a key resistance based on this chart until proven otherwise. And we'd started to eat this chart yesterday, and then overnight we had a solid move to the downside, testing our next support. Predictive model. Basis this chart, we'd said yesterday, this 88 to 89, this was a key flipper on this chart. Came down and we hit that 73. Overnight, we've undermined that 71. We said this was an important zone. That's been undermined. We've come down, we've hit that 68.75, which is basically a flipper. And the bottom of this range, and then we get into the extreme range. So this is our extreme range, and basis this chart, that's why I've said we're going to use 58 for our support until broken. So anybody playing long side, we're using 58 stop. And I've suggested, because 62.5 is intact, that's our aggressive support. So there's a basis for the things that I put down in the room and make calls here. It's not just, my intuition. I want to back up my intuition with facts. This was posted earlier in the room. This is our tunnel through time. Note how we got that spike high. And then since then, we have been searching for support. Backing and filling is the way I'd like to see this considered. So we're going to keep an eye on the yellow lines as they come down. We're going to keep an eye on this blue line. That's going to be an important idea. Above or below that is a 30-minute chart. I like 30s. So for now, we can see that it's honored that chart and said, now we're going to go down and test some more support. And stolen range is part of today's problem, obviously. There's a 60-minute chart that I had posted earlier. In addition to 15, we want to keep an eye on this because we're not in an umbrella trade in this. We're now in this funnel we migrated from 30 yesterday to the 60, and we can see where the rain line, we have not been back here. Count them, 1, 2, 3, 4, 5, 6, 7 days. So there's a regression trade is all we know. And that's the way markets move. We get surges and then we get consolidations. So until we take out this 55, there's a gap here still, a couple of ticks. Till we take out this and start eating into this bar, all we know is that we're backing and filling. So a friend of mine, Matt Davio, posted something about, I saw one of his charts, 26 possible this week. I suppose that's possible, but I'm not thinking anything like that. I'm thinking that if we take out the 55s, you still got to take out this platform right here. So certainly that 38 to 35 area, big retest back in here, which would be the, this breakout bar. So we're going to take it one step at a time. And this chart was posted, we talked about this yesterday, and I had suggested in looking at this chart that this area right here, this 58 area, is the key. Don't even think about 25 until we get by 58 and 55s and so on. And in my opinion, this is today's important support area. We take that out, of course, then anything goes. So for now, we're looking at this as the monthly range. We're looking at the spike high, and then we've been selling off ever since in a solid downtrend, but it's still backing and filling. And the beginning of the month typically will have the best bias, and we're still in the beginning of the month for another day or so. I usually like to go until about the 8th through the 10th. So for now, we've got to look back here at this 80 area and say, all right, that is an important resistance, 80, 82. That's what we're using. This 82 high up here. That's resistance until broken. And we could do some backing and filling. So I don't want to get caught short today. If we get a plunge, I'll be very surprised. I think we're testing support, but we've already come a long way, and the odds are just as good to get some kind of a bounce. So I'm going to say two-way day, and this 61.5, 62 area right here, very important. If that breaks, then we already know potential targets below us. So my suggestion, play the range for now. Got trapped long, so they'll have to pay up at the open, and then after the dust settles, then we're going to look to see if it's not a two-way day. Convenient trade today should be the bounce from the 62 support. That's already played out to a certain extent and has not gotten very far. Angels and demons. This is your setup for angels and demons. 64.5 is your angel. Your demon is back here at the 78.25. Middle is 71.5. So we're going to play that range, say 62s to 72s first. That's got to be resolved before anything else. And light volume again. So my suggestion, if you're a conservative trader and you don't like this open, relax a couple of minutes, let the dust settle, and then see if you can't find a range trade, grab a couple points and do it a few times, get your VIG and go play.